On a quiet September morning back in 1992, an invisible war was about to kick off. Now, this wasn't a war with armies and tanks. It was a war of assets. It was one man against an entire empire, with billions of dollars just hanging in the balance. This is the story of a financial heist so gutsy, it brought one of the world's most powerful financial institutions to its knees.
So how does that even happen? How does one person manage to do that? Well, we're going to break down exactly how, on a single day that would go down in history as Black Wednesday, the legendary investor George Soros went toe-to-toe with the Bank of England and won. It really is a masterclass in strategy and timing and in finding a fatal flaw that pretty much nobody else saw coming.
You know, every great heist story needs a weak spot in the vault. In this story, the vault was the British pound sterling. And let me tell you, its security system had a massive, hidden vulnerability. So to really get how the attack worked, we first have to understand the system it was built to break.
Okay, so this system was called the European Exchange Rate Mechanism, or ERM for short. Just think of it like a club where all these European countries agreed to link up their currencies, pegging them to the German Deutschmark, which was, the big, strong currency in Europe at the time. In 1990, Britain was fighting some crazy inflation, so they decided, hey, let's join this club, maybe it'll bring some stability.
But here it is. Here's the fatal flaw. Britain joined the ERM at an exchange rate that was just too high. The pound simply wasn't that strong economically, and what that meant was the British government was now legally on the hook to defend an artificially high price for its own currency. It's kind of like promising everyone you'll sell $10 bills for $15. Sooner or later, that's going to cause a big problem.
Now, a vulnerability that big, it doesn't stay a secret for very long. And it caught the eye of a man who'd basically built his entire career making huge bets on these kinds of macroeconomic trends. A man who saw not just a little weakness, but the chance for the trade of a lifetime. George Soros.
This quote right here from Soros's top strategist, Stanley Druckenmiller, is really the key to the whole thing. They figured out they were looking at what traders call a one-sided bet. See, if they bet against the pound and they were wrong, they'd lose a little bit of money on interest and fees. But if they were right and the pound collapsed, well, the upside was basically unlimited.
So all through the summer of 1992, Soros and his quantum fund quietly start to build their position. They began shorting the pound sterling, which is basically borrowing pounds, selling them right away, and planning to buy them back later at a much lower price to pocket the difference. It was a huge bet that the pound was going to fall. The initial stake? An incredible $1.5 billion. But that was just the appetizer.
Now, every good strategist waits for a trigger, right? A signal to launch the main attack. For Soros, that signal came from an interview with the head of Germany's powerful central bank. His comments basically hit the news wires suggesting that, some currencies might need to be realigned. The market read that loud and clear. Germany wasn't going to save the overvalued British pound. That was the green light.
So what does Soros do? He doesn't just add a little to his bet, he multiplies it, cranking his position from $1.5 billion all the way up to an almost unbelievable $10 billion. He knew the British government was already on the ropes, struggling to keep the pound propped up, and now he was going to deliver the knockout blow.
By this point, the whole market is smelling blood in the water. Soros has his $10 billion bet locked and loaded. On the evening of September 15th, he turns to his team. And his instruction was simple, it was direct, and it was absolutely ruthless.
Yep, go for the jugular. Those three words changed everything. This was no longer just some passive investment waiting for things to play out. No, this was an active, all-out assault. The plan was to sell pounds on such a massive, unprecedented scale that it would just completely overwhelm the Bank of England's defenses and force the currency to collapse.
The very next morning, September 16, 1992, the markets open in London and the battle for the British pound is on. In one corner, you've got George Soros and an army of other speculators, and in the other corner, the full power of the British Treasury and the Bank of England.
So as Soros and the others start flooding the market, dumping billions and billions of pounds, the Bank of England mounts his frantic defense. But the day just becomes a series of desperate, failed moves. They bought billions of pounds. They jacked up interest rates, then jacked them up again. But every single thing they tried was like trying to stop a tsunami with a beach towel. The pressure was just too much.
The government threw everything it possibly could at this problem. It burned through something like £27 billion in foreign reserves just buying its own currency to try and create demand.
Then, in a pretty shocking move, it hiked interest rates from 10 to 12%, and when that didn't work, it announced an even more desperate hike to 15%, all in the same day.
But nothing worked. The market saw these frantic moves for exactly what they were: the last desperate gasps of a failed policy. For Soros and the other traders, these rate hikes weren't a show of strength. They were a signal that the end was here, and it was time for one final push to sell the living daylights out of the pound.
And in the end, the whole battle just became a self-fulfilling prophecy. The more traders believed the pound was going to be devalued, the more they sold it. And of course, the more they sold it, the more inevitable that devaluation became. The Bank of England was totally trapped in a fatal feedback loop. By 7:30 that evening, the fight was over. The British finance minister held a news conference to announce what was once unthinkable. Britain was surrendering. They were pulling out of the European exchange rate mechanism, and they were just going to let the pound float freely on the market. Soros had won.
And the aftermath, wow, it was staggering. As soon as the government support was gone, the pound just nosedived, falling 15% against the Deutschmark and 25% against the US dollar. And this shows you the brutal reality of the trade. British taxpayers lost an estimated £3.3 billion. And George Soros? His personal profit from that one day was over $1 billion.
But the damage wasn't just financial. Prime Minister John Major had staked his entire reputation on the ERM, so when it collapsed, his government's economic credibility was just destroyed. The event shattered his political career and is seen as a huge reason why his party suffered a historic defeat in the 1997 general election.
So, in the ashes of Black Wednesday, a legend was forged, and a really powerful lesson was learned about the way modern global finance actually works. George Soros was now, and would forever be known as, the man who broke the Bank of England.
The story of Black Wednesday is just this stark reminder that even the most powerful, most historic institutions have weak spots. And it leaves us with this one critical question. What happens when a player who's bold enough finds that single point of failure and decides to go for the jugular? Well, as history shows us, the whole system can come crashing down.